Hello, this is Scott Schubert, and today I'm going to show you how to actually trade the non-farm payroll or the FOMC or any big Forex news event. And what I'm about to show you is extremely valuable. And there are a tiny few people in the entire world who apparently are able to do this. And yet, when I show this to you, when you watch this video, I already know that there's quite a few people who are going to look at it and they don't see what I'm showing, even though it's like completely obvious, very simple. But a lot of people is just going to go in one ear and out the other, and that's fantastic. I've been watching this happen for a long time, and I've been talking to many people, and the kind of different experiences that people have is just amazing, because sometimes it just makes me want to smile and laugh at the different responses that I get from different people, where one person will be saying, you know, I have completely changed my life as a result of the things that you've showed me. And now I am a full-time professional trader, and I'm traveling the world, and I'm consistently making money. And then another person will be exposed to the exact same thing and say, this is a waste of time. I didn't get anything out of it. Well, of course, we already know that if there's a problem, the problem is with you. And so what I'm about to show you, I'm going to go ahead and actually show you how to trade the non-farm payroll. And some of you are going to be able to, from this point on, trade this event every month and get consistent, huge amounts of profit over and over for the rest of your life. But of course, there is a little bit more to what you're going to see here today, and it takes a little bit of practice. Okay, so there's several really big economic news events, and the non-farm payroll is one of them. And this comes out once a month, and it, of course, is a US dollar news event. And you might have noticed, if you've been trading for several years, that it really doesn't even have the kind of impact that it used to have several years ago, and it seems to be getting less and less important. But still, it's one of the major news events. And lately, for the US dollar, the FOMC statement, which comes out on a Wednesday afternoon New York time, has created a bigger impact than the non-farm payroll. And then some of the things that come out of Australia for the Australian dollar are also, to me, more important than even the non-farm payroll itself. But what I'm about to show you is going to apply to any news event. So the thing that you're going to notice is, especially with something like the non-farm payroll, there's a tradition of people treating this event as if it's a big party, and they get excited about it, and they're not really approaching things as if they're engaging in a business. They're really approaching things like it's some kind of a big party, and even more so, like it's some kind of a gambling event, or like going to the horse races, and they're all excited to see which horse is going to win the race. And that in itself, that whole mindset and the emotional approach to trading, is part of what causes people to mess up. Now, I've been hearing people say over and over that, oh, I don't trade the non-farm payroll. It always messes up my trading, and it always causes a big chaotic problem in my trading. And when I look at the charts and I look at what I've been doing, I don't see that. I don't see that there's any chaos or problem or anything like that. I see the same thing that's always going on, and it's just a normal, natural process. And I don't see that chaos or people saying that, oh, the banks are making me lose, and because of the non-farm payroll, and they tricked me into thinking that it's going to go one way, and then it actually went the other way. And I don't see any of that. And I'm going to show you how you can also be able to not see that and see the truth of what's really happening. Okay, here's the first mistake that people make, and that is that they go to too short of a time frame. And this is what people do normally in their trading all the time, and this is one of the biggest mistakes that people make, and I can totally, absolutely prove that. If you are interested in seeing it, I'd be glad to show you why it is that it's not that you shouldn't go to a short time frame. It's just that in order to see what's going on in the market, you really need to kind of look at all time frames. And even if you're on the short time frame, you still need to look at a range of time frames. Like if you're on the 5-minute, many times a person is on the 5-minute, and I could show you that what it is that you need to see right now might be on the 10-minute instead of the 5-minute. And they're just they set up their charts in a way where they're zoomed into a certain angle on a certain time frame, and they can't see the things that they need to see, and it's not possible for them to see it. And I'm very happy to show more and more people how it is that you could just start learning to see the things that you need to see in the market in order to read it. Because then you're going to be able to actually know what to do, because you can now see what to do, and before you couldn't see it. So the next thing is, before the non-farm payroll or a big economic news event, for instance, the London session before that New York session, we know from several years of experience that it's pretty likely that the market is going to remain flat and that we're not going to have any trades. So we have plenty of time to prepare for that time and do your analysis beforehand, so that you've already written down what you intend to do, and that you're not going to see the market start to move or see the news come out and jump into a trade because of that, or because of excitement or because of emotion, but you're going to get into a trade only if you see that an entry is actually forming based on your understanding of how to identify an entry. So then the next thing you want to do is, when you look at a chart on any time frame, you want to learn to identify the type of shapes that the market tends to make. And well, if everyone could see what it is I'm talking about here, the the world would be a different place for many people. But let's just say that if you see this type of a shape on your charts, in general, this represents a market that you want to take profit on. This is a market where you want to exit a long position. If you see any kind of a shape relative to a previous shape like that one, and it looks anything like this, this is actually the kind of setup where, in general, you would want to be buying the market. Well, if people could actually just look at a chart and start to see this kind of thing, then it would make a world of a difference. But if you get the general idea that, of course not in hindsight also, but actually when it's happening, that this point is not a place to buy, and you don't have any intention of buying when you see that. But that's one of the biggest problems right there. And any time in here, you're not really planning to sell. In general, just the general idea of that, based on a shape, based on counting anything, it was just based on the shape that the market makes in terms of what is a trend and what is a correction. And then what you do is you just open up your charts and don't just go right to the extreme short time frame, but start in the longer and work your way down to the medium time frames. And if you're on the medium, if you're on the 1 hour or the 2 hour or so, and if you see this type of a shape on the charts, in general, you should go into the economic news event probably closing a long position before the news comes out, and probably go into the news event with the plan that you're not even going to enter a trade, but if you do, it's going to be short. And then if you have something like this, any kind of a shape that resembles a correction, then you're going to be going into the news event with the expectation that you might go long. if the news supports it, and if the price action is behaving in a way where it's forming the end of a correction. Then, well, some of you are going to actually open up your charts. You're going to see that this is not my opinion about what people should do, but this is what the market itself is revealing to be a fact, a scientific fact of reality, that if you want to make profit in trading, this will be a good thing to do. And you could take off all of the fancy indicators and proprietary indicators and throw away your robots and your proprietary alerts and signals and so forth, and start to focus on this, and you probably might actually do a little bit better. Now, once you get that general idea, you're going to see that that's a fact. It's a scientific fact that no one in the entire world can ever even begin to claim is not true. This is a fact, and anyone who has eyeballs can open up a chart and become aware of this fact. The only thing left would be to refine your skill at identifying when the market is in what is known as a trend versus when it is in what is known as a correction, and be able to know that that's what's happening at the time it's happening, such as back here at this point, to be able to know that it is in the process of forming a trend of some kind, and that this will be the most likely thing that's going to unfold after that point in time. And then after this point in time, when you can identify that as an end of a trend, which we have learned to identify right at the very point where it's forming the end of a trend, then we know that what's going to happen after that is some type of a correction. We know approximately the price range where it's going to go, and we know after some time and experience how to identify when a correction is forming an end and a new trend is forming, as opposed to any kind of a minor fluctuation that the market would make, which is not an actual end of a correction. Is there a way that you could actually develop a skill to learn to identify that rather than buying another gimmick software or something, but to be able to actually see it and recognize it? Well, maybe that's kind of a novel or revolutionary idea, but something to think about. When it comes time for a major economic news event, you look at your charts, and if there's a trend, plan to identify the end of a trend, and that primarily represents a point to exit a trade. It could, under certain circumstances, represent a point to enter in the opposite direction of the trend with some caution. And when there is a correction to a trend forming, go into the economic news event with the expectation that if the correction has come to a point where it has formed a complete correction, if you know how to identify an end of a correction, and if a correction is complete, that you might want to enter in the opposite direction of the correction. And so if the news comes out and you got this shape on your chart and the market starts going up, well, every time, just this last non-farm payroll, we had some patterns, and I said before the news came out, I said if the market starts going up, I'm not going to enter a trade, and I'm going to wait. And there's usually a delayed reaction. It might be 45 minutes to an hour and a half after the news that the market actually turns in the direction that you expected it to turn. So some of the mystery is removed if you just learn to identify this. But anyway, if you have no idea what the hell I'm talking about, that's just fine, because just go back to whatever you're doing before and ignore all of this. But if it clicks and you happen to look at a chart and notice that this is a fact, well, maybe you might discover that maybe you're onto something. I can show you real life example after example of how this works. And it's going on every month for every one of these events. And, well, obviously not everyone can see it, but that's fine. Anyway, last week, at the time of the non-farm payroll on the euro versus the U.S. dollar, we were around this point in time. And on that day, I said, okay, if the market starts going up, I'm not going to enter a trade today on this, and I really don't plan to enter a trade. And I specifically said during our trading session that I'm not planning to enter a trade on the euro, going long or short. And at the time, I felt very clear and confident about that. So this is approximately where the announcement occurred, and then the market kind of died off. It was pretty much flat. And then the market closed, and it's the weekend. You can't see that on here, but it was definitely not a good time to enter a trade, long or short. If you look back in hindsight and say, oh, I should have went long, well, whatever. Anyway, another thing is that when this type of U.S. dollar news comes out, the first thing I want to do is look at the U.S. dollar versus the yen. And I don't trade that pair, but I look at it in order to gauge the reaction that the market is having to the U.S. dollar news, if it's reacting in the predictable manner. The euro versus the dollar is often one of the worst ones to gauge the reaction on, because it may move in the opposite direction of what logic would dictate in terms of the value of the U.S. dollar. So if you've been watching it for a while, you probably know that. So just a little tip, look at the U.S. dollar yen, see what's happening, and then continue to watch the rest of the pairs and trade something else. I usually don't even trade a U.S. dollar pair unless it's a really clear reaction, and in which case I might go ahead and get into one of these, either the euro or the pound, but normally I'm not focusing on those pairs. And since other pairs that are correlated with the yen pairs will also move, and sometimes they end up being a much better opportunity, even though they don't contain the U.S. dollar in them, I'm usually looking at other pairs. And last week, I made it very clear that I'm not entering any trades. And then later on, we saw a short on the euro kiwi and the pound kiwi, which turned out to be excellent. And it was the only really good opportunity that day, and it had nothing to do with the U.S. dollar. And it was quite a while after the news, and we didn't do anything else. So our results were perfect on that day. I consider that it was like the best that you could possibly do, is to not enter any trades, sit there, wait, and then later go short on these other pairs that aren't even related, because there was a nice move on them. This is the point where, viewed from the 1 hour time frame, where the non-farm payroll occurred and we went short on the euro kiwi. There was a specific reason, and some people can see it, some people can't. Some people get upset if I don't explain exactly why in this free video, and show you every detail of why we didn't get in there. But there were some specific reasons. Just to give you a hint, it's not some secret rocket science thing, but it's because we can identify the end of a correction. This is the point where it occurred on the pound kiwi. Notice that we specifically chose to enter these particular pairs, and specifically chose not to enter any other pairs, and that kind of thing astounds and amazes people all the time. How did you know to enter that pair? How did you know to look at that time frame, and so forth? It's actually kind of simple once you start to see it. You see this point right here? This is where the FOMC statement came out on June the 19th. And this was a trade that we planned in advance before the news came out. And the reason for it is just based on the fact that the market forms trends and corrections, and it forms turning points that we are able to identify. And how was it that we actually also, at the time that it happened, were already specifically focusing on this time frame, as well as some other time frames, where we can now see a perfect, if you know how to identify the different factors that come together to identify the end of a trend or an end of a correction or a turning point of some kind. How is it that we were able to go to this specific time frame, the 12-hour, not the daily, not the 8-hour, but on the 12-hour we were able to see this, and we're able to do it all the time, consistently over and over and over, while the rest of the world has no idea what we're talking about. So anyway, I've showed you probably way too much, and it's really not for the average person to know about this stuff, but if it helps you at all, maybe that's a good thing. To find out more about what really works in Forex trading, just contact us or go to our website at forextradingseminar.com.